how much time are left on the leases, how do their rents compare to what I feel are the market rents in that area, and a quick glance at a rent roll that has their start date, their end date, and those lease rates. That'll tell me, okay, I'm downloading this, and I'm gonna underwrite it.
What is up, everybody? Welcome back to How to Invest in Commercial Real Estate. We are a podcast and YouTube show just breaking down how to invest in commercial real estate. And today we're just going to jump right in. So one of the biggest questions we get from people wanting to get started investing in commercial real estate and start taking down deals on their own and raising money and kind of sponsoring a deal is, how do you guys underwrite? How do you put it together? What do you look for? What do I need to keep my eye out for? So we thought we'd put a few deals together, and Joel hasn't seen any of these deals. Brian hasn't seen any of these deals. I picked them out. So kind of true first raw impression. What are you looking for? What do you hate? What do you not hate, et cetera?
Yeah, and I think it's important to remember, what we're looking at today, I think, are retail deals.
Retail deals, yeah.
But what will govern what deals you're looking at is your investment objectives. And so that will be, do I want Class A, brand new stuff at a low cap rate, high price in the middle of Dallas? Okay, that's going to be a different deal.
Right.
For us, we do a lot of, maybe B class retail in pretty good locations that can get 8, 8.5, 9 cap and a pretty good cash on cash return. So I don't know if these will be like that, but
yeah.
Well, and you might even eliminate something quicker than that if it says it's for sale for $50 million, right? I mean, as opposed to...
Yeah, so I have a target of like 2 to 10 million is a real good range. I'll buy up to 20 or even down to $1 million, but 2 to 10 is a good range for retail for us.
Okay.
Yeah, and you really need to reverse engineer how many deals you need to look at based on how many deals you want to buy. So, right now we're trying to do 3 to 5 deals a year. That's comfortable for us. It fits our pipeline. It satisfies everyone's needs. So we know that we need to be looking at 50 to 100 deals a month, pretty easy to meet that goal of finding one a quarter that we're convinced this is it, this is the deal, we're going to push this one, I like it. So you need to look at a lot of deals. And in order to look at a lot of deals, you can't spend an hour on each one.
That's 1,000 a year you just described.
Well, there could be 10 a day that I look at. Is that right? Pretty easy. But what people have to remember is a lot of them I'll eliminate just by the look of them. Or let's say retail comes through and it's got 2-story. I'm not probably interested in a 2-story retail. The second story always struggles, so that's out. Mm-hmm. Or if it doesn't have the right exterior, and I think it can't really be ever improved upon or repurposed, I may just skip that. So there's a lot of ways to get through a lot of deals, and then you still are left with maybe I still have to look at which ones I want to underwrite. That's going to take a lot more time than which ones am I going to put an LOI in. So you have to look at a ton.
Yeah. So generally speaking, you get a rough list of parameters, and then you can bend the rules a little bit. But generally, if it's got like a 25,000 square foot, like
big box tenant,
yeah,
you may not want it.
You're gonna be a little weary. That may just throw it out right there. 25,000 feet, done.
All right, so let's get into it.
Yeah, jump to the first one.
Okay, I'm going to look at this first one here. Haven't seen it before. Multi-tenant retail. Looks like it's in Midwest City.
Okay.
Midwest City, Oklahoma.
And if you're watching on YouTube, you should be able to look at what I'm looking at. It's got a grocery store. Is that a shadow anchor? I don't know yet.
I think the crest is not included.
Okay. 35,000 feet, good. That's a good size for me. The first thing I like is that Midwest City, it's not a great market, but there are some decent parts. It's just south of Oklahoma City, for those that don't know. So that would be somewhere that I would buy. The asking cap rate is 8.75. That, to me, is good. With me getting debt around 4%, 8.75 starting ask is something I'm going to definitely try to dig into. So it's very positive. One negative I see here, it's at 76% occupied.
That could be a positive, depending on how you look at it.
Yeah, it could be.
And could that be the reason they're asking an 8.75 cap? Or I guess if you dig in, you might find out.
Yeah, that's an interesting. Some people, they will go lower on cap because the occupancy they think provides you some upside.
Oh, right. Okay.
But for me, you always ask in retail, why is it not leased? Multifamily can be mismanaged, but retail you don't really mismanage retail that much. So there may be a reason why you're holding on to some vacancy. All right, let's go further. The first thing I see here, I want to see rooftops. And we see a decent amount of rooftops here. Nothing, if I see a lot of just land, maybe it's not in a highly populated area, I would pass.
Maybe some traffic counts too. It's got
18,000 on 22,000 on that main street. That's pretty good. 10,000 is still acceptable to me. If it's 2,000 or 3,000, I'm probably passing.
Yeah, that's the middle of nowhere.
Yeah. So let's keep going here.
Well, just traffic count might make you pass on a deal.
That's right. Okay. Yeah.
All right.
Okay. Population. Let's see. Is that 5 miles, 100,000?
I mean, I can't see anything. I like it.
It's small, but that's a little 5 mile radius, 100,000. That's not bad. It's not really great, but sometimes you'll get 3 and 5 mile radius of 10, 20,000 people. To me, that's probably a red flag. Not that deals wouldn't work, but with retail, you really need population density, and so that. I'm gonna demand at least 50, 100,000 people within a 3 to 5 mile radius of what we buy.
Okay. Yeah, and generally, you're looking at rooftops and you're looking at traffic counts because for a business in a retail center that we want to buy to thrive and succeed and then make money themselves, they need to have people passing their business and live close by that they can sell food to, they can sell clothes to, they can get gym memberships for. That's really important on retail.
It has been for us for sure. All right, let's see. Not too much info on that page. So this gives me a little bit of a look of where the vacancy is. So that crest is next door, which isn't bad. You have pretty good frontage visibility. Sometimes retail deals are set back.
Yeah, especially these grocery anchored ones.
Yeah, this is right up next to a 20,000, traffic count road. So I like it. Let me see. The vacants are all small. So that is actually good for me as well. We find when you get over 2,500 to 3,000 square feet of retail space, your number of users that can take that much space kind of goes down.
For sure.
And they're harder to lease. But 1,000 to 1,500, most businesses that want a presence can fit.
When you think about HVAC units, you think about renovating the space and tenant improvement dollars. You think about the lease term and your brokerage commission. I mean, bigger space is just at scale. It's just more expensive.
All right, let's keep going. They kind of do an overview of the tenants. All these tenants are okay. You have a comment?
Yeah, one question I have right off the bat is how's the Crest Foods doing? Like if it's predicated on being next to a grocery store, I would want to make sure that grocery store is doing all right.
And how do you find that out?
You could probably talk to the management company that's managing it, or try to call the owner. You could go there on a day and see the traffic that's sitting in the parking lot. That would probably give you a good feel.
A solid broker of this deal would have already had that in his back pocket. He knows that's coming. You know what I mean?
Yeah, and you could talk to other businesses in the area or other brokers that are in Midwest City, and they'll be able to say, "Oh yeah, I know that deal. That deal does really well," or "That deal's struggling." Right. So there's people you can call.
Yeah.
So Dollar Tree is the anchor. I want to see how many square feet the anchor takes up. 8,000, which is okay because Dollar Tree can take. I've seen them in 10,000 feet before, so that's not too big of a space for Dollar Tree. And then it's just a bunch of other small tenants. One thing I have is you have these vacancies. When's the last time they were rented? Are they built out, or are they, have they been vacant for years?
Yeah.
Kind of just try to get a feel for the demand. Let's see. Lease highlights, $10. So the next thing I'm going to do is look at the rent roll, and I'm going to get through right here. So
yeah, it doesn't have rent on it.
It doesn't have rent on it.
Yeah.
Interesting. So that's what when we're doing it live, that's what we get. Let me see if they have another one.
We're live.
We're live. Typically I'm not too worried about the expenses because, it'll tell me, the leases will tell me if they're passed through, and I can figure all of that out and further due diligence. So in this initial look, I'm really wanting to know how much time are left on the leases, how do the rents compare to what I feel are the market rents in that area, and a quick glance at a rent roll that has their start date, their end date, and those lease rates. That'll tell me, okay, I'm downloading this, and I'm gonna underwrite it.
So if you're interested in this deal, that's one of the first things you'd go back to them and ask is for the rent roll. If it's not on.
Yeah, here it is. It's small, guys, but It looks like 16, 17, 18. Those are all okay. Dollar Tree's at $10. That's
higher than I was expecting.
That's okay. Nothing's over $20 except this U.S. Corps of Engineers.
What's Dollar Tree at?
$10.
Okay.
None of these, besides Dollar Tree that goes out to 2026, there is a lot of lease roll. You've got 22, 23, 23, 23, 22, 23. So in a year, in the first 2 years, you're going to have renewals of a majority of your tenants.
This is about a year old.
Huh?
This OM is about a year old.
Oh, okay. It's about a year old. Now that could provide you opportunity to raise rents if the rents are under market. These look like they're very close to market already. Yep. Not over market, but not really significantly under market.
And really, you're just trying to gauge that probability of, is my income going up? Is it going down? And why do I feel that way? Is it because leases are expiring and they're way under? Or is it vacant space you're leasing up, or so on?
Yeah, all of these look like they're about at market rate. So then I need to understand, can I lease the vacant space? And do I think the majority of these tenants are going to renew with me at similar terms? Yeah. But with what I've seen, this is something that I would dig into at 8.75 asking cap. If that's, I think that was on the actual NOI.
Yeah.
And so if it is, that's a pretty good opportunity for me to dig into.
So I mean, cash on cash, roughly, you should be able to hit 16%.
Yep, 16-ish, depending on your loan.
And that's just cash flow. I mean, that's not even your IRR, depending on what you could project a sale at, which is a bit more complicated, but overall, pretty good.
Yeah, so that's a deal. I kind of went through what I would do. I would give this a 5-minute overview like we just did, and I would decide either to call the broker and get information or put it in the trash pile. Okay. All right, let's hit the next one. All right. Plano, Texas. So I do
Sounds
like
expensive.
I do like Plano. Let's see here. Okay, 9.3 million, a little bit large. The asking price is $220 a foot. Most of the retail we purchase is lower than that. Not that it can't be worth it. Plano is a pretty hot area of North Dallas, but we've purchased deals at $75 a foot all the way up to 180 a foot. Okay. So this is already higher than what I'm normally used to seeing. And the ask cap rate is 6.78%. That is on the lower side of what I want to buy retail for. So unless everything else about this is perfect, I won't even get through the whole OM because it's a big retail deal at under a 7 cap asking at $220 a foot.
Well, maybe it's anchored by a Chick-fil-A ground lease or Chipotle in the back somewhere. Dig in.
Yeah. All right. So let's take a quick look here.
Domino's. Okay, that's no Chick-fil-A.
No. It's 100% occupied. So they call upside. They say, oh, it's an asset with upside opportunity, but it's already 100% occupied, and I'm going to pay a 6.5, 7 cap for that. All right, let's look at current. Well, this is just kind of an income and expense. It looks like average income is about $15. That's not bad. All right, here we go. This is the rent roll. So we've got no big. Well, we have the banquet hall. So I don't love banquet halls.
Well, I mean, what's wrong with the banquet hall in 2021?
Yeah,
what are you talking about?
square foot banquet hall.
With what we went through with COVID and things, those businesses struggled, and their business is intermittent. It's not a steady everyday kind of a business. It's not like an event center in high demand for weddings. So I don't love that being 9,000 square feet, which is almost 20%, 22% of your center.
So would you even keep flipping right here, or is this trash pile already?
This is really close to trash pile. I'll just look at the rents. 15, 16, those are okay. The triple nets look high. It's almost $7.
It's hard too because some of these, like Texas King, I have no idea what they do.
Yeah, you definitely don't have. You definitely don't have any credit at all. Hindu Temple and a K9 university. These are all tough businesses for me to get my head around. So I don't think I would keep going on this. Just more. Let me see if there's what else there is.
Oh, look at the Chick-fil-A.
Hey. Okay, so you got it. Chick-fil-A likes it.
Yeah, I mean, they've maybe got a ground lease out front.
I probably, at this cap rate, just given that retail I can get at 8.5 cap, It's not going to make someone money. I'm probably going to pass at $9 million. So let's do the next one.
All right.
Yeah, when I look at retail that's priced that way per foot or at that cap rate, I'm looking for better quality tenants, maybe better quality lease guarantees, longer leases, a really top-notch looking center.
If you're under 7, I can go to Vegas and I can get a decently located, pretty new retail property.
With tenants that you recognize from a rent roll.
Yeah, and so that's why that one's going to be tough for me.
Okay.
All right, this last one that we'll take a look at, it doesn't say where it is on the front page, but I like the visibility from the street. It looks relatively new.
Indianapolis, right outside the Indianapolis airport.
Okay, outside the Indianapolis airport.
I really like this deal, by the way.
$5 million. So that's a good price point. Easy equity raise for us. The cap rate looks a little low, but 7.2. Now I can, if I make an offer in the 7 3/4, 8 range, I can still get some cash on cash numbers that I want. So it may be worth looking into. Let's see, 26,000 feet. So you're less than $200 a foot. That's better.
I tell you from personal experience, pitching something, Joel, at over $200 a foot, just throw it in the trash.
All right, let's see. Looks like it has a restaurant on the end.
I like the way it looks.
Yeah.
Yeah, it's a nice looking.
It sits good on the road. Wow. All right.
So it's hard to find this property, but it's kind of.
I forget we got to describe it a little bit. There's people listening. So it's in the middle or kind of on the edge of what looks like millions of square feet of industrial primary looking jobs.
And you've got Walmart and some Target and Kohl's. You have retail area pretty close. This looks like it's right off the highway, or what they're calling Quaker Boulevard with 20,000 cars a day. So the traffic counts are good. And it's located southwest Indianapolis near the airport. Okay, I don't have any problems there. Chicago's Pizza is the main tenant.
So that's probably just a local pizza joint.
Yeah.
I'll put a pin in this right here. I like site visits. I'm a firm believer you got to get boots on the ground before you make an offer, or at least before you get into contract, after you have the LOI, pending, somebody and you can kind of vet it out. But you got to get boots on the ground. And Chicago's Pizza is why. You fly down to Chicago's Pizza on a Tuesday and it's packed out. You can feel way better about that, knowing, versus if you walk in and it's like empty. A vacant buffet that smells like dead rats, like that tenant's out immediately. It's out.
Yeah, and I mean, it costs money to go look at these things, so you definitely want to do a little due diligence before. But yeah, you have to go look at it eventually,
right?
Before you get serious and start spending money.
Yeah, I'd make sure you're in the realm of possibility, with the broker and everything like that.
So all these rents are at $15 a foot, 16, 15. I don't know Indianapolis that well, but those don't seem high at all to me. They seem pretty reasonable. They do have a couple of vacants.
It looks like they're tied up in options as well.
Yeah, everybody's got some options. I need to understand that because the options aren't good for the owner. They're good for the tenant.
100%.
Because the tenant can take it or leave it, and it locks you in on your upside. So I need to look at what those options are. Are they at the same rent? Well, then I just gave them 5 more years at the same rent. I can't grow my income, and we already talked about in another podcast how much income, rent increases drive profitability. So I need to look at that.
I was talking to a broker the other day, and I was complaining about lease term, and he's like, "Yeah, but they have a 5-year option."
Yeah,
like that's a moot point.
Mm-hmm. Unless it's at a huge increase. The leases, there's some term left. 29 is one. That's good. 25.
Who's until 29?
Chicago's Pizza. So the rest of these are local. UPS stores typically are a good bet because once people have their addresses at a UPS store, they just keep them. Most of these other guys are pretty local.
Sort of thing?
Yeah.
Okay. I would imagine it's hard to change that.
So for this one, I'd want to understand the vacants, if they've ever been leased, or when the tenants exited. If they had built this, let's say 10 years ago, and those vacant spaces have never been leased, that would be a red flag for me. That the area isn't quite supporting as many of the tenants, and it may be that they signed up a bunch of tenants 5-10 years ago, and they're all coming due, and they can't wait to get out of there because it hasn't been as good as they wanted it to.
That's a great question. So how do you How do you ask those questions, and who do you ask them to? Is it like, let's say you got to the site visit because it's interesting enough?
I wouldn't get to the site visit on this one. There's some positives, but the cap rate is a little bit lower than I like. So I would start this off with a detailed phone call with the broker.
Okay.
And I would dive into all these questions. And based on that call and those notes, that would determine whether I pull the trigger to fly up to Indianapolis.
Okay. So there's a lot on that call.
You need to be ready for that call. I'm asking a lot of different questions about the area, about the development, about the owner.
Why are they selling? What's the motivation?
Yeah,
what is the
asking
seller
about
profile?
these specific tenants, if they have other stores, is this their only location? Just lots of stuff, just trying to get comfortable.
Ask about the vacancies.
The vacancies, how long they've been vacant, why they're vacant. Have you had any leases roll? Did the tenants renew? Were you able to get increases on that renewal, meaning that they like the location, they want to stay? So all of that you're going to dig into on a call, and I might do that with this one. I like Indianapolis. It's a good deal size. It's nice and clean looking from the outside. But I would want to, first thing I'm going to ask the broker is, hey, you listed at 7.2. I think this is an 8 cap deal. And he says, we haven't had a lot of interest. Go ahead and make that offer. Oh, that's positive. Or you could tell me, Joel, don't waste your time. I've got 7 offers already on this thing, and they're all close to asking. Well, then that makes my decision for me because I want to buy it at an 8, and he says he's already got buyers at 7.2. So,
it's been a while, but I bid on this deal. I really liked it. I was ready to fly up there, but I think it ended at, hey, let's put a pin in that offer. I think we're going to get one better.
Okay.
And we didn't get a call back, so I'm assuming they got a better one.
Be interesting to know if they sold it.
And that's kind of the risk you take with trying to get a deal. Like, you're always trying to get the best deal you can to make the most money you can. But at the end of the day, there's real competition for these assets, sometimes now more than ever.
Yeah, and sometimes if there's a lot of competition, you just have to be patient and wait for one that for whatever reason didn't get as much competition.
Years.
Yeah, and right now on multifamily, that means I don't buy any of them, maybe, because there's just so much competition on multifamily right now that I either have to be okay making an 8% cash on cash instead of 16, or I just don't buy multifamily till the market starts to correct. So I don't know what the right solution is. I know people are killing it in multifamily, but the prices are going to levels that I never thought they would go. So
okay, so we looked at 3. We'll kind of wrap it up here. Look at 3. Which one are we diving into? Like, if you only had the 3, if you decided to make an offer today and this is all you had, you're diving into 1. Which one?
Out of those 3, I'm going to go back to the first one because
no way.
Midwest City.
Yeah, it has the vacancies are really small, and the asking cap is 8.75, and so there's just as a lot of room for potential upside.
What would your answer have been?
Oh, it was Indianapolis the whole time.
This one right here.
Oh yeah. We offered on Plano too.
Must
for
like
the record.
Yeah, we did. We went and looked at Plano, right?
Yeah, and then we did go down and look at Plano. Thought I was going to get a deal in COVID. Plano's a great market, tons of houses, tons of income, tons of jobs, tons of traffic counts. It's obviously enough traffic counts to sustain a Chick-fil-A, but anyway, I think that was a great episode. I mean, a lot of people just by setting like, okay, I just need to look at more deals. I mean, it's probably not your investment criteria, is it? I mean, I would think it's just look at more deals.
Yeah,
you'll find one.
Yeah,
ask maybe a little bit better questions.
Like Joel said, he looks at 8 to 10 a day. You're
my inbox is full of deal after deal after deal. So it's very easy to get on those lists. Just start getting on brokers' lists, signing up for newsletters and all these things, and people will send you everything you want to look at. That you'll get too many, and then I can just hit this button and click these, and then maybe the 8th one grabs me. I pull it up, I open it up, I look at it, and then I'm back to deleting. But that's how we find good deals. That's why Brian can attest, because he's invested on all of our deals, that we've had a bunch of winners in a row.
Yeah.
I don't know, 15, maybe 20 now. Statistically, we should have had some that didn't go very well, but we try to be really careful, and we go through a lot of deals to find something we feel good about.
Well, I think that's it for today. If you're listening on the podcast, make sure to go check out the YouTube channel, How to Invest in Commercial Real Estate, so you can see the offering memorandums and all the stuff on the screen. But I think that's it. We'll see you next week, guys.
Thanks, guys.
Thanks.